Well, we're off to Button Moon, we follow Mr. Spoon. Well, hello boys and girls. We're going to have a recap of my account this month and have a little chat about failure. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers. I am the overgrown child that is the Scruffy trade. And you might be a little bit surprised at the moment thinking, hold on, I thought this was a trading channel. He's in a sweet shop. Got that one right. I am. This is my wife's shop. And I spend a lot of time here because one of the beauties of trading is I can do it where I choose. Now, most of the time you'll see it with the Lambo boys.
You ding-dong!
Sitting on a deck chair under a palm tree and a laptop. Well, that's not really reality. The thing is, most people work for a living. And my wife certainly does. Don't get me wrong, I do okay. And I prove that on a daily basis. And I've yet to see anybody else do what I do. I put my head on the block every single day, and as part of the Scruffy Squad and one thing and another, those guys will testify, I tell them what I'm trading hours before I take it. But there is a big reason between success and failure, and I'm going to show you my stats so you can kind of see what I'm doing with the 5%ers. It's a good prop firm, and then I'm going to have a little bit of a chat about it because I saw a message last night that's kind of triggered today's video, and I just want to kind of discuss the mindset behind it, and hopefully it might sort of click a light bulb moment. So if all that sounds good, click the subscribe button. Genuinely helps. And if you like trading content and you really want to see it in the real world, click the like button. It's just a small click to you, but it does mean a lot to the channel. So let me go get a coffee and I'll jump on the screens.
Well, we're waiting.
Okay guys, so back at home, back at my desk, got my coffee, because you need a coffee. Well, Scruffy does, he had a jolly old time yesterday, so he's really needing a coffee. Anyway, what am I banging on about? Yes, update my 5%ers account, and also going to touch on sort of failure or reasons why you fail in trading. I know it's not a great subject, but I do think it's something that should be addressed, and I'm going to show a couple of things and then give my thoughts on it. Simply because if you can tackle that, the rest of the process comes a little bit easier. I'll kind of explain later when I've done this. So 5%ers, who are they, what are they, and why am I bothering in the first place? Well, the reason I'm doing it is really for the guys in the Discord group that I run. It's a couple of the guys who are interested in taking this funding, and they just wanted to see if it was good, bad or indifferent. Checked it out for them, and as they're on that journey and we're all in it together, because one thing I do believe with the Scruffy Squad is we're in it together. There's no sort of teacher-student scenario in there. We're all the same, me included, you know. And it's just a nice community to be along. And because we talk about this thing all the time, it was only fair that I trade it in front of them. Because it's no good saying you can do something without showing it. And that's kind of why I do a lot of trades. And every one of those guys will tell you, I tell them what I'm doing way before I take the trade. So it's not an after event, you know. I don't have one of these. And it's the only way that I know how to be fair. You know? Yes, I get slagged off all the time, and well, we'll touch on that a bit later, but just small-minded people who just are clueless, I guess. Anyway. 5%ers. What are they? Well, they're a prop firm that will take you into market straight away. And what do I mean by that is, a lot of prop firms out there will have an evaluation program where you have to trade for 30 days or even 3 months before they give you any money to let you, well, I guess prove yourself is the way. The way the 5%ers work is you pay into the fund. See it here, there's the different plans. And as soon as you pay your money, you are live. But the way they combat it is they give you a small amount of money to start with and a mandatory stop out. If I take the 40,000 as an example, you would buy in for $450. The mandatory stop out is $400. So you've essentially covered the costs before you've taken on the program. So it's kind of a win for the prop firm. But the win for you is you're immediately giving funds that are live. And in this case, their valuation is $10,000. So you buying in for 450, but you've got the buying power of 10,000. So they give you like quite a good leverage if you want to look at it that way, which means you can open up pretty much any position you like. Now, with the stop out, this bit here, if you let that account go to 9,600, it just automatically terminates. Game over. But the way to combat it is keep your position small and build up a pot. It's kind of what I'm doing, and I'm going to show you that in just a second. And as that pot grows, it means your position size can grow with it.
No way!
So in essence, the first part of the journey, shall we say, is quite slow. You've got to build up the momentum. But that's a good thing because it's teaching you to manage your risk. And it's also teaching you to control your position size. Because if you go straight in at this and go, right, I'm going 5 a point, it doesn't take long to be 400 quid offside at 500 a point. Trust me, I know that. You know, if you're at £5 a point, you want to be looking, you can be running £1,000 offside very, very quickly. Especially if you're on a very fast moving product. So calm it down. You know, I'm trading this at pennies and I'm doing this platform here, the 52,000. I'll show you that in just a second. But what's the outcome? Well, the outcome is once you've achieved 6%, they'll take your 10,000 and they'll quadruple it up to the 40,000. And then once you do 10%, they'll double it and they'll keep doing that every 10% till you hit over 1 million. Now, just to give you an idea, there is the step profiles there. So it's a good program. It's good. And I was quite pleased with it and one thing and another, so I decided to trade it. Now, I run everything on spreadsheets, as you know, or at least if you follow me, you would know. And this looks pretty scary. It's not. To me, it makes perfect sense. Start with a summary. Tells me exactly where I am, what I'm doing. You know, I started this mid-April. There it is there, and it's growing nicely. Okay. And if I run through to today, it's kind of broken up into 3 sections. This is the overview of the money, where we are and what we're doing. This is the targeting section, and this is the trades. If you have a look at the trades, see 10 pence a position. But I've now started to get it up to 20. And I know you go, that's not a lot. Well, it's actually broken down to the smallest point because I break trades. If I'm at £1 a point, I'll open up 5 positions at 20p. Why do I do that? Just kind of the way I do trade management. It helps me sort of let trades run It also helps me manage my risk, because if I see something that I think is not quite right, I can shut a couple of those positions off. Yeah, take a bit of a punch in the nose, and I do it. As you can see there, I'll close positions off if I think something's wrong, and I'll let the others run. So it's kind of just balancing out. And if I was totally wrong, well, I've still saved myself money by shutting some positions off early. It's just sort of the way I do it. But the update is I'm just over a month into this, and I'm just shy of 34% of the target I need. I've done 23% of that this month. Quite good. Still running a very high hit rate, 87%. And I'm starting to get the bid sizes a little bit higher. All right. And it's all based on sort of my compounding plan and my wage maker plans. It's just the way I build accounts. I've always done it that way. But the figures that you really want to be paying attention to are the ones that are here. This is the 5%ers platform. It's completely third party and verified by a third party. It can't be changed. What you see is what you get. So there you go. There is the growth, 307.81, and that's what I was talking about, the stop loss. It's increasing, which means I can increase my position sizes. As you can see there, the symbols that I use, my daily win rate is pretty strong. My trade distribution, I do trade reasonable amount. There are losses in there because not inhuman, I do lose. But that's the bit that I'm more interested in, which is my equity curve. There was a blip, as you can see here. I had a trade running on non-farm payroll at the beginning of the month in a meeting, and I didn't get to it in time to manage it. But that's why your stops should be there. Your stops are there to save your account. It might hurt you, but it should never kill you. And as you can see, I had trades running, I quickly recovered, and off we go. So again, very, very happy. Now as I pull this down, I've got no open trades at the moment. I've taken a total, starting this, 249 positions, holding an 87% win rate. I have achieved in profit 2,404 pips. I've lost 435. So it's kind of given me a net total of 1,969 pips since I started profit. I think that's pretty darn good. It's hard work, but it's getting there. My risk reward is pretty much in check, and I'm just pleased with the way it's going. But the bit that I wanted to show you was this. My average position size is 20 pence, just 20p. And in a month, I've done a week's wages off 20p. And it's all about just building up slowly. I'm not chasing the unicorn. And that's the bit that I want to kind of touch on at the end of this. So that's where I'm up to. It's doing very well. There's all the closed trades. There is loads of them. It just keeps on going. So that's all of my real-time sort of brokerage account. I can't get it any simpler than that, guys. I'm just plugging away at it. So let me get my coffee, and I just want to show you a couple of things and just kind of give you my thoughts as to how you need to address being a trader.
Wait.
Okay guys, so that was my figures. I genuinely hope you didn't think they were boastful. It's not the intention of that or the
channel for that matter. The whole idea is to inspire you with your own trading. Maybe show you that it's possible. But the part that a lot of people forget is I've done this a long time. And it wasn't always a bed of roses. In fact, in the start it was horrible. Well, it was horrible. Made more mistakes than anybody. But then I battled through it and bought this course, went on that seminar and sort of mentorship, all that sort of stuff. Went through the whole lot. And I took a bit from here and a bit from there, cobbled it together, and then kind of self-taught to where I am now. But I still had to do the courses, etc., to understand what I was up to. Now, I want to show you a Facebook comment and an email, and then I'm going to sort of discuss them. And they were very good, they weren't bad at all. Here. And what I'll do is I'll do it in two parts, because they're kind of two sides of a coin on a similar subject, and that's failure of trading. You see, the first one, whereas not everybody can do that, is best described by my little green friend. But talking of little green friends, say hello to everybody, Winky. You may enter.
Okay.
Oh God, what's that?
I'm just going to do some computer.
Looks like the Visa bill. Say hello.
Hi,
See how she's smiling there? Isn't that like the Cheshire Cat about to pounce on the mouse?
You have caused confusion and delay, and terrible trouble to my trousers.
Oh, that's disgusting.
You have a lot of things, but not a mouse.
Well, been called worse. Sorry. Anyway, as I was saying before being rudely interrupted by my little Winky, she can interrupt me whenever she likes.
You dirty old man.
Sorry. But yes, my little green friend here can explain it better than I can.
I don't believe it.
That is why you fail.
And that is very true. It's non-belief. And if you don't believe it, you've kind of failed before you start. So it's the defeatist side of trading. And that is as powerful an emotion as the fear of missing out and revenge trading and everything. Because you just haven't got the heart for it. So there's no point trading. So give it up. And then the email is the other polar opposite, but in the same place. And what do I mean by polar opposite? It just hasn't got the money or the time to trade. And that's why you fail. Because in order to succeed, you have to have those two currencies, money and time. Now, your money is obvious. You need money to fund your trading account, and the money within that trading account makes you money. But then you need the time to apply it to the screens in the first place. Now, reading between the lines of the email, doesn't have any time, 50 hours a week, and limited funds once the bills are paid, which is the same of all of us. And all I would suggest with that matter, and as I replied to it, was don't trade at all. Put your money in a mutual account and just let it grow gently and learn as much as you can in the process. But when we're talking about money, you can't really learn to trade on your own. At some point, you're going to have to pay for your education. And if you think that it's all going to be free and you'll just be self-taught, think of it this way. If you're learning to drive a car, and I'm pretty sure most of us here have drive a car and passed the test, did you read a book, watch a couple of YouTube videos, and then go down to the test centre and pass your test? No. You might have read your book, watched a few videos to get a feel for it, but then you had to get an instructor. And that instructor then shows you exactly how the car works. Even though you know what a steering wheel is, you know what an accelerator is, you know what the gears are, the instructor shows you how to apply them. And that's a different thing. Knowing what the parts are is one thing. Knowing how to put them together is something else. But the instructor can't give you something. And no instructor can. Not even in sort of trading arena where we are. And that is experience. Because the only way you learn is through experience. But it's all part and parcel of the same thing. So if you don't believe it, well, you failed. And if you have got limited time and resources, you still fail. So you're kind of caught between a rock and a hard place. And that's why the failure rate in this industry is so high. Because it attracts a lot of people for fast money. And I know a lot of people will be going, just show me what you do, it'll be fine. It's not as simple as that. But there's also another element to it. You see, in the Facebook group, and this echoes this, I've had it for maybe it's 2 years. There's over 400 people in there. Nobody talks to each other. Nobody asks any questions. But they all hold a hand out wanting a free system or a signal. And they put as much value on what's in there as what they paid for it. Nothing. So it becomes a vicious circle. I've paid nothing for it, so I get nothing out of it. I've paid nothing for it, so I get nothing out of it. Backwards and forward. Whereas in the Discord group, which is part of the paid membership, those guys, from 6 o'clock in the morning till midnight, they're chitting and chatting all day, they're sharing ideas. I spend a lot of time in there. I show them my trades way before I take them. I tell them what market, direction, and why I'm getting in, all that sort of thing. But now the guys are telling me what they're taking, direction, and why they're getting in. And they're sharing it all together. And it's because all of the knowledge is coming together for them. And they're building up a community. And they're getting the value out of it, what they're paying into it. And it's the yin and the yang. If you pay nothing for it, you're going to get nothing out of it. If you pay for something, you're going to get some value. And that's why traders fail. And that's why I say this is controversial. Because everybody wants it free. Well, there's no free lunches in this world. None whatsoever. And if you believe there is, I think you're in for a real hard shock. Anyway, just my thoughts on a Saturday afternoon while I was sort of doing an update on there. I didn't want it to be bad, and it's not bad. And I didn't take offence by any of the comments, but it kind of echoes the feeling of the way the market is. And I think if you put the time in and you put the work in, you'll get there. But if you're looking for quick money, don't trade. You'll only end in heartache. So, bit of a somber one. Rant with Scruffy, if you want to call it that. Anyway, I'm going to have the coffee and I'm going to see if Mighty Mouse can rise up.
You're taller than I imagined.
I'm bigger in every department.
Hey, Winky. Do you think am I a man or a mouse?
How does your missus put up with you? Must be my legendary prowess as a lover.
Right again. Sorry. Anyway, if you are stuck, by all means contact me. I answer everybody. I genuinely do. And sometimes you don't hear what you want to hear. But if you've got a question, I'll answer it. And if you just want a basic chat, I'll happily talk to you. So, keep trucking. We all get there in the end. And remember, guys, do what you love, and the money will follow. See you all in the next one.